I'm pleased to introduce Dustin Angelo. Dustin is the president and CEO of Anaconda Mining. Dustin's been a director of the company since late 2009, and he's been in his current role for nearly 8 years. Anaconda is a gold producer in Newfoundland and is developing another gold project in Nova Scotia, so a strong Canadian Maritimes presence. The company is also in the process of making an offer to shareholders to purchase Maritime Resources Corporation, which owns the Green Bay Project. And that's considered to be a nice complement to Anaconda's Newfoundland operations on the Baie Verte Peninsula. And I'm sure Dustin will give us some more detail on that. So Dustin, please.
Thanks very much. So Anaconda is a growing Atlantic Canada gold producer. We have two main centers of operations. So we are in Newfoundland on the Baie Verte Peninsula. You can see it on this map. It's the smaller peninsula with the two red stars and the yellow star. So our Point Rouge project, where we've been in operation and producing gold for about 8 years, is the star on the left side on that small peninsula there. We've been producing about 16,000 ounces per year for the last several years. We also have an exploration property called Tilt Cove. It's in the Nugget Pond horizon, where that's historically been an area of very high grade. The Nugget Pond mine was there several years ago, and it was producing at about 11 grams per ton. And then, as Anthony mentioned, the Green Bay Project is the subject of our takeover bid. It's the yellow star there. It's the primary asset there is the Hammer Down mine. So that's the main one of our main geographic focuses. Then we also have the Goldberg Project, which is down in Nova Scotia. You can see the blue star around Nova Scotia. It's a project that's got over 800,000 ounces of measured, indicated, and inferred resources. We've recently done a PEA on it, and the average annual production is about 41,000 ounces per year, and we're expecting to be in production by about 2021. So between our two main projects, we have a pretty large mineral resource, over 1 million ounces, and then if we're successful with a takeover bid with Maritime Resources, we'd add about another 1 million ounces, have over 2 million ounces in our portfolio just in those two main areas. So we're looking at some pretty high growth in the next couple of years, next 3 to 5 years. The annual production, we're at 16,000 ounces right now. We think we're going to be going to about 50 to 60,000 ounces per year when Goldberg comes online in 2021. And then we are in the middle of our regional consolidation strategy. And right now we're focused on the Maritime transaction. And if we're successful there, it'll be a catalyst to take us to about 100,000 ounces per year. So there's significant production growth in the next 3 to 5 years. And of course, there's significant exploration upside with our projects and with the Green Bay Project. We'll talk a little more about that later. The Atlantic Canada region is a great jurisdiction to do business in, very mining friendly. The governments are open for business, particularly where we are in the rural areas where the employment, they're looking for more jobs out there. So we're going to focus today on the two main projects, and we'll talk about Maritime. We also do have an exploration project where the two stars on the northern peninsula there, but we'll keep to the main projects for today. So just a quick snapshot of our mineral resources and reserves. In total, including the Great Northern Project, we have about 1.6 million ounces. Goldberg is the signature deposit in the sense that it's got high-grade resources. Our PEA that we put out had the open pit portion of our mine plan at about 3 grams per ton, and the underground portion at about 7 grams per ton. At the Point Rouge project, we recently added another deposit that we call Argyle. We're currently processing ore from our original Pine Cove pit. We will be moving further east, about 3.5 kilometers from the mill, to our second deposit called Stoggertite. You can see the table with the mineral reserves. Between Pine Cove and Stoggertite, we'll be processing ore there for about another 2 years, and then we'll bring Argyle on after that and continue on with our mining there. We're starting the permitting process at Argyle, so we expect to be ready with that deposit by late 2019. So I'm sure that folks have an opportunity to look at a lot of different junior mining companies. We kind of want to talk about why we would necessarily stand apart. It's first and foremost, it starts with our people. We have a lot of experience, particularly in the Atlantic Canada region. Our senior staff has worked on several different projects, not just the projects that we currently have, but also projects from past companies that they worked with. We've worked at the exploration stage, development stage, and of course production. So we have a wide range of experience, in particular in Atlantic Canada. Well, of course, we're an established gold producer in Atlantic Canada. We're actually the only ones that have been in production on a consistent basis for the last 8 years. So we have a lot of brand recognition. I think a lot of our success comes from having a strong corporate culture. We're pretty resourceful. We're pretty innovative. We do out-of-the-box type projects. For instance, recently we sold our mine waste at our original Pine Cove pit as a construction aggregates product and generated about $2 million in revenue from that over about a 16-month period. We're certainly experienced in mining, economically mining small-scale deposits. The Pine Cove pit that you see in this picture here, we've been mining that for 8 years, about 16,000 ounces a year, and over that period of time we've generated about $50 million in project-level EBITDA. And that's everything I'm quoting is in Canadian dollars. And of course, everything is underpinned, our entire strategy is underpinned by the infrastructure that we have in place. And I think this is a significant component of our strategy and why we have a competitive advantage, particularly in the region. We have a 1,300 ton per day mill. That mill does produce a doré bar. We have a permitted in-pit tailings facility, and that's pretty critical in the context certainly of the maritime transaction. That capacity is 15 plus years at our current throughput rates. And then we have a deep water port that's over on the left side of that picture there. That's where we exported our waste rock as a construction aggregates product. And of course, in the future, if necessary, we can also import ore. Corporate structure, we got about 107 million shares outstanding. Our market cap is about $40 million. Cash position at the end of December was about $4 million. Very little debt, $1.3 million in debt. About half of that are capital leases, and the other half are low interest bearing government loans. So we're in a pretty good position from a balance sheet perspective. As I mentioned before, we do have a very experienced management team and a board of directors as well. We're a vested team. Between the management and the board of directors, we own about 7.6% of Anaconda. So just to talk a little bit about the projects themselves, as I mentioned, we put out a PEA recently on Goldberg, $120 million NPV, Canadian dollars, at a 38% IRR, a little less than a 3-year payback. We're looking at a 9-year mine life at an average about 41,000 ounces per year. Very good cash operating costs, just around $650 Canadian, and an all-in sustaining cash cost just around $800. $89 million in capital costs with a $15 million contingency, and the grade, as I mentioned before, on the underground is about 7 grams. On average, we're about 5 grams. What we like about this project too is that it's got some great leverage to the gold price. We did our PEA at $1,550 Canadian, and we've been trading now for a little while at $1,700 Canadian. That 10% increase in gold price translates to a 35% increase in MPV. So a lot of leverage here in the gold price. What we like even more about Goldberg is its growth potential. We're in development stage right now because when we acquired the asset, there was a significant amount of mineral resources to justify development of the project, but at the same time we are expanding the project. So what you see here is a long section of the deposit divided into the 3 different gold systems that are here. Basically what you're looking at in the cross section, what we've got in Goldberg is a series of stacked, folded, mineralized zones. This is a geology that's similar to the Victoria Goldfields in Australia, the same type of rocks. What we've been able to do in just over 7,000 meters of drilling since October is demonstrate the fact that the deposit does extend. It expands at depth, and it's open, continues to be open at depth. Also along the limbs of these folds, and as well as along strike. What we've got here is a couple of the most recent assays. We actually we drilled off by section, and this is the latest section. If you can see, there's a line there for section 9100. There we were able to intersect a lot of new mineralization, and then also intersect mineralization down plunge. One of the key things that we did discover here is some significantly high grade at very large widths. For instance, 11 grams per ton over 13.5 meters, and then almost 10 grams per ton over 7.5 meters. What we encountered in this particular drilling in this area was a fault system that we hadn't seen before or haven't really looked for. And we think that there's an association between the faults and the thicker, higher grade zones. So in future drilling, we're going to follow up with a 2,000 meter drill program to test some of this and see whether we can find more of these high grade zones associated with faults. And if we can, it would have a significant impact to the deposit itself and the overall economics of the deposit. So there's been significant growth and upside with Goldberg, and all the while for the last several years, we've been an established gold producer with a pretty consistent cash flow and pretty consistent production. We've been doing about 15 to 16,000 ounces a year at the Point Roos project. Our guidance for 2018 is a little bit higher because we are moving away from the Pine Cove pit, where it's now going to be a tailings facility, and we're now moving to east about 3.5 kilometers to our next pit called Stoggertite, and the grade there is a little over 2 grams per ton versus what we've been mining recently in Pine Cove, which is probably around 1.4 to 1.5 grams per ton. So we're looking at a little bit higher production, which will certainly help with the bottom line. And more importantly, this is the infrastructure as we move ahead that is going to be used for the maritime or the Hammerdown deposit. So just want to talk to you a little bit more about that. This transaction, we launched a bid on April 13th. We've got roughly about 20% of the stock already locked up or tendered. This is a great transaction, I think, for both the maritime shareholders and for the Anaconda shareholders. It's all right in our backyard. Similar geology. We certainly have an understanding of this area. We're able to truck the ore from the Hammerdown mine back to the Pine Cove mill. Certainly, we think we can get some improved economics over the pre-feasibility study that Maritime put out. The numbers you see here are all from the Maritime pre-feasibility study. We think we can reduce some operating costs because in their study they were looking to go to the Nugget Pond mill, which is roughly about 30 kilometers further away than ours. So we can improve on transportation costs, we can improve on administrative costs since we already have the personnel at site at the Point Roos project. The capital costs too, we think we can improve upon those as well. This project is very accretive to Anaconda. It also gives the opportunity to the shareholders of Maritime to finally have their asset be put into production. We think we can do this in roughly about 2 years, short circuit some of the permitting process since it is a former producing mine and there is already a permit there that we potentially could reinstate. So at the end of the day, we will, if we're successful in this project, in acquiring this project, what you see here is potential to really control this peninsula where there's 2 significant fault areas where all the gold has been deposited along these 2 significant faults that run up the Bayvert line and the Green Bay line. We're at the top of that with the Pine Cove Mill and our Point Roos project, and at the southern part of it is the Hammerdown mine, and then we have exploration projects over what's called Betts Cove, or as I referred to before as the Till Cove property. That's where the Nugget Pond mine was at roughly 11 grams per ton. So there's a significant potential to find higher grade resources along these fault systems. And then what's not noted on here, just west of the Hammerdown mine, is an exploration project that Maritime Resources also owns. So we'd have considerable real estate in this area, and we'd have sort of a pipeline, everything from exploration in development and in current production. So we'd be able to sustain ourselves for a very long time in this area and generate very good economics. So when you put all this together and you look at sort of from a valuation standpoint, I think there's a potential here that Anaconda can see a significant re-rating. When you look back on it, we have the Point Roost project that's been a very good cash generator. The Goldberg Project is expanding very well and can be significantly bigger. We've also got a PEA out on it already that's saying that it's about $120 million net present value. Our market cap right now is around $40 million. And then the accretive transaction that you see with Maritime, we're essentially buying these ounces at roughly $12 per ounce. And we're trading right now at about $36 an ounce. So there's immediate upside in the transaction. Certainly, the implied value that we're paying for Maritime right now is about 16 cents. They've been trading recently before the announcement at like 9 or 10 cents, so they're seeing a significant premium of roughly about 60%. The stock is currently trading at 12 cents, so there still is an arbitrage opportunity. So there's near-term upside for anybody looking at the Maritime shares, and then there's a longer-term upside in the potential re-rating when you bring these two companies together. So in conclusion, I think the big takeaway here is that we're able to expand our resources, increase production. We're on a path right now, assuming that we can bring in the Hammerdown mine. We're on a path for roughly 100,000 ounces a year of annual production. We'll continue to do M&A and bolt-on, and with that, I think with the 100,000 ounces of production, combined mineral resources of measured, indicated, inferred of nearly 2.5 to 3 million ounces, we become a significant mid-tier producer and then have a significant presence within Atlantic Canada, and potentially at that point maybe we become attractive to a larger producer that wants to expand their own footprint as well. That's it. Thank you very much.
Thank you, Dustin. So we do have time for a question, if anyone has one from the audience. Dustin, for us, the Northern Miner, we've been following the story. It's a good story. You guys have been very aggressive, and it's not lots of nice news flow, which journalists like. Yeah. But given how much you've already done and what's been going on, there's some moving pieces there. What about milestones for, let's just say, the next kind of half year, 6-month period? Sure.
So yeah, the key milestones, obviously, with the Maritime transaction at the forefront. That's our biggest milestone. That transaction, the bid is open till end of July. So we'd like to get that closed by then. We are advancing the Goldberg Project at the same time. So we're looking at doing a bulk sample that we'd probably start in mid-year as well. And then we are continuing with drilling there. Like I said, a 2,000-meter drill program. And then we're probably going to follow it up with a much larger drill program.
Great. Thank you very much.